And welcome back to the markets. And we have obviously tomorrow, we have the markets opening up. And I think that we are going to gap up tomorrow. I just want to go through like what happened with the market last week, because there was a lot of volatility, a lot of things pulled back. And then obviously the market kind of closed mixed on Friday. And you have to keep in mind, there's still a lot of concerns over the elevated AI stock valuations, which we did see that reflect in a lot of AI stocks, the labor market, the federal government shutdown, which also limited economic data releases and also dented like investors of a late bounce in the Dow and the S&P on hopes of progress towards ending the shutdown. I'm actually hearing today that there are some talks that the shutdown could be over soon. So we'll see tomorrow. I think the market's going to actually gap up. The longest, also, this shutdown's been the longest in U.S. history. And we could see the tech-heavy indices did lag, and it did kind of cap some of these, weekly gains. So you are going to see continued volatility. There's a lot of different other key drivers that I just want to cover off. The AI tech pullbacks, a lot of investors kind of rotated out of overvalued AI infrastructure stocks like NVIDIA, sparking fears of an AI bubble, which, by the way, is absolute crap. There's no bubble. And this contributed to the NASDAQ's sharp decline, its worst week actually since April's correction. So, the economic signals, people saying weak jobs data, surging layoffs, and a University of Michigan consumer sentiment reading at a 3-year low fueled risks of sentiment. No official jobs report due to the shutdown. And then obviously I talked about the shutdown. Maybe there'll be, an opening this week. Stay tuned for that, because it's, out there right now on social media. Also, like crypto, we talked about this before, like Bitcoin, Ethereum, those are dragging stocks like Coinbase. And, sometimes some of these trade tensions with China kind of eased up with Earth licensing plans loosening up. But overall, like the pullbacks to me appeared as healthy consolidation in a bull market. And so we are looking for the December Fed moves and shutdown resolution for direction. Valuations might seem a little stretched, but with 2025 earnings growth projected at 11%, I think we'll see some good action as we head into year end. So before I go on about additional commentary that I want to give you, I want to turn it over to Dan Ives, my favorite analyst from Wedbush, and he's going to actually go over, can the trade get back on track? And he's talking about the tech sector, because if you noticed, a lot of the tech stocks tumbled on Friday. So I'm going to turn it over to Dan, and let's see what he's got to say here. And a good listen from Dan Ives.
So tech stocks can still rip higher by 8 to 10% into year end. Dan Ives is Wedbush's global head of technology research. He joins us now. Dan, great to have you with us.
Great to be here.
We mentioned some of those names, the high flyers, Oracle, the Palantir, AMD. I want to go to Meta, though, because Meta seems to be an interesting sort of example of this question that investors are really asking themselves in terms of what they're getting for that AI spend, the prognostication of we're going to spend a lot of money, and it's time to spend money because we've got to seize the opportunity. But but they're not really giving investors a roadmap as to how they're going to reap the returns on this investment. Is Meta an outlier, or is this going to be the example that we look back on and think the whole sector is going to be held to this standard at some point?
Look, I think Meta is a bit of an outlier just because, obviously how dramatically more they're going to spend on CapEx and what happened to numbers going into next year. But in my opinion, Meta's a table pounder here, and I think below 600, because it's my view, they're transforming this business over the coming years. Zuckerberg right now, wartime CEO. I get, fretting about everything that's happening here, but this is an AI arms race. And I continue to view it as you want to see them spend, because you're talking about the earnings growth over the coming years is going to be massive. That's why they're spending.
Dan, it's Karen. Thanks for being on. Thanks for wearing that outfit. It's always good to see what you're wearing. So
Great.
Meta, which is a big position for me, so it's been a painful week or two. The promise of what the spend is, we know that their business, that they've been able to use AI in their business, and the product that they're able to deliver to advertisers has really that's working. But the part that we don't know is the llama spend, and we do know they get some revenue sharing. Maybe you could tell me how significant that is. But that's still a big question mark. What do you think the return on this, whatever they're going to spend, $100+ billion next year? What does it need to be?
Look, I think the return ultimately is going to be multiples of what they're spending over the coming years because they're going to change their whole advertising model. You look at the monetization of 3 billion users, that's what they're focused on. I mean, and I think that is the smart move because the meta today is going to be a whole different meta over the coming years. Even when you look at the further monetization that you're going to see from the hardware perspective and software, they're building out a new ecosystem. And I think that's where, of course, the winners, the clear ones, NVIDIA, AMD, chip makers, everyone else. But you look what's happened in Microsoft here. I think that it's another table pounder under 500 because in my view, the enterprise backyard will be Redmond's. And this is one where I think the market is sort of misread or maybe nervousness in terms of what we're seeing.
Dan, you're pounding a lot of tables. In fact, the kitchen shaking or the dining room shaking. The one in your notes that I'm most interested in hearing about is maybe not surprising to people that watch our show, is Apple. And you've come kind of 2 or 3 different visits to us from being very concerned about that moment and act fast. And you turned to being bullish last time, and now seemingly more bullish. Explain that. I'm pounding the table on the hoodie as well.
It's great to see the table pound. Look, and part of it, but even just taking a step back, is that it's my view we're still in the second inning, maybe third inning of AI revolution, right? So that's why I continue to view these tech names where they're heading. When it goes to Apple, look, the whole thing that changed once Google won the DOJ suit, that opened what I believe the yellow brick road for Apple to go aggressive Google Gemini on the AI partnership. And I think that's really the consumer AI revolution is going to go through Apple. That's $75 to $100 per share as it all plays out. Then iPhone 17 being the surprise upgrade cycle, numbers will continue to go higher. And it goes back 6 months ago, New York City cab drivers bearish in Apple. And that continues to be the name you want to own.
When does a shakeout happen, Dan, in these names? I mean, if you look back at the internet boom, there were companies that participated in the boom and then got shaken out when things sort of rationalized. Are we going to see that moment in this boom, or is it just pound the table, pound the table, pound the table? It just doesn't seem right?
No, I think you're going to see the shake. I mean, the shakeout's going to be clear because you could say AI 15 times in a conference call. It doesn't make it an AI name. It just needs to be execution. Palantir will sell off, but you look at those numbers, that was a masterpiece quarter in terms of everything that they're executing on. Companies that don't execute, you see these are stocks that will be down 30, 40%. I think 2026 is going to separate the winners. We talk about the AI winners from what could be the losers or the fakes. And I think that's the opportunity. It's a stock picker's market when it comes to AI. I think that's really the theme here.
Well, you know what? He is right about that. It is a stock picker's market, and these are really great companies, strong fundamentals, strong earnings, strong cash flow. I mean, really, it depends. You have to be an investor. Are you an investor long term? If you are, you're going to love these opportunities on the pullbacks like NVIDIA, like PLTR, like Oracle, like Meta. And, you can also consider, if you like taking the ETF angle on these cash positive cash cows, you can certainly make money on those as well. I'm going to just turn it over now to the Seeking Alpha commentary here. And we have some comments here. I'm just going to move myself out here so I can make the screen bigger. So we could see here that Scott Bessent today made a comment. There was a comment on social media with regards to Trump saying the $2,000 tariff dividend could come through tax cuts. And there was some comments about paying individuals $2,000 from the president fund there, and $2,000 tariff dividend for most Americans in the term of expanded tax cuts rather than direct payments. So we'll definitely see. He did mention it on Truth Social post earlier in the day where the president actually said that a dividend of at least $2,000 a person, not including anyone, high income people, will be paid to everyone, and criticized those who oppose tariffs as fools. So Bessent said he hadn't discussed the idea yet with the president, but noted that the dividend could come in lots of forms, in lots of ways. He pointed to the administration's ongoing efforts to reduce taxes and also no tax on tips, no tax on overtime, no tax on Social Security. How about just getting rid of tax, period? He didn't say that part, but I'm saying that. So Trump's remarks came as he continued to defend his sweeping trade policies, which face legal challenges. We know earlier this month, the Supreme Court heard arguments in a case seeking to overturn his global tariffs. And so we are waiting for that decision. He keeps on saying also, the president, that such a ruling would be a disaster for the U.S. economy. And so we are waiting to hear back. We know that the president posted again on Truth Social today that the United States is taking in trillions of dollars and will soon begin paying down our enormous debt, which is $37 trillion. That's a lot of debts there. Then we can move on here to this information here. You got Plug Power tomorrow reporting before the open, so you could definitely keep a watch on Plug Power. And I'm going to go show you here the other catalyst for the week here. There's a lot of stocks to watch. If you have a watch list, you might want to put them on there. So you have here, obviously, we have tomorrow being Monday. We have in the earnings, you got Oxy, Instacart. A lot of people use Instacart for shopping. You have Tyson Foods, CoreWeave, and Paramount Skydance. That's all tomorrow. Then on Tuesday, we have some more earnings. OKLO, I think that's going to be one people watch. And obviously the mem play, Bind Meat. Now, this is the fake meat company, but let me tell you, there's been a lot of options flow there. I just think people are buying it in case of a potential short squeeze, potential effect. It is a mem stock. So, if you are seeing flow, don't be misled. Definitely people are probably taking it as a lotto play. And that's really how you got to do these earnings calls, is lotto plays on options, because they don't always pay. Wednesday, we have some more earnings here. We got Circle, Cisco, GFS, Flutter Entertainment. Moving on to Thursday, we got Disney, JD, StubHub. And then Friday, we don't really usually have a lot of earnings on Friday, but we do have the American Bitcoin, ABTC. So that is what's coming ahead as well this week. So stay tuned. You can see here also, I just want to show you this chart. Okay, so you can see here on this chart here, this is the SPX. We had a nice rip on Friday, basically starting around 1 o'clock, then pulled back around 2, and then just took off into the close. So we had a really strong close. I did share a BMNR trade on Twitter. So if you follow my Twitter handle at ILoveStocks1, you would have got a free play there for 85% gains. And also, I did alert a swing trade in my chat service on SPY call, and we took it swinging overnight on SPY. So let me just see which one it was. Just going to log in here and take a look here. The SPY swing. Yes. So we did take a lotto. We took the 680 call and we got it for 14 cents. So I did a bit of a higher strike because I liked that it was a cheap option. But also, the other reason I took that trade is I kind of felt like they were buying the dips on Friday earlier in the day, and that they ran the close here. And then we should see potentially gap ups tomorrow. So definitely keep a watch on SPY and see what we're watching and dealing with tomorrow. So let's see what kind of week we're going to have this week, everyone. Have a great weekend. Have a great rest of your day. And see you Monday. Bye for now.